So at the beginning of this week, I talked about few currency pairs and my projection on each of them. Euro US dollar is very one of them. And my projection on it was to see a continuation of a sell on it. All of that aside, today I welcome you to class again. This is a boot camp slated for this week. We should be having this today and tomorrow. Thursday it won't be possible. I'll have training with the South African team on price action. So if you missed last week price action training, on Thursday this week you will have access to it again. I'll be speaking and teaching at the South African zone on that particularly. You can join that on Zoom, okay? So now, but today, let's go straight to the business. I want to show you what's referred to as fair value gap. This is based on high demand. I've talked about it multiple times. And sometimes I don't talk about it much as I've done before now. So today, I'll talk about it again. It is called fair value gap. Fair value gap really means that we have imbalanced structure at some point in the market. I believe everybody can hear me and everybody can see me. So please, because when I ask questions, if you can hear me, let me know. Nobody says anything. All right. So I believe everybody can hear me and everybody can see me. Okay, now that being said, let me go to okay, can you suggest a currency pair of choice, which we'll be using for a case study? Just suggest a currency pair. Anyone very quickly, please. Suggest a currency pair to use for a case study. Can somebody suggest a currency pair? Is no one here? Okay. Okay, I think I see what happened. Okay then. So so I just dropped the chat on your chat box now. If you can hear me, let me know. Okay. I just want to know what's going on. Okay. You can't type, I guess. Is it that you can't type or you can't unmute? Which one?
I tried to send in a message, but it's not going through. I don't know
Okay, but
what's going on.
you can definitely unmute and talk. Okay, that's fine. That's better off. Okay, I'll work on the other one. So I say you should suggest a currency pair of choice, but since no one is saying anything, I just go ahead and use anyone for a case study. Euro US dollar.
Sorry, sir. It's the it's no longer displaying. We're not seeing anything. I'm not seeing anything on the screen.
No, that should be from your side.
Okay.
Yeah. So this is Euro US dollar. Please kindly mute your microphone now. This is Euro USD, and this is the 4-hour time frame. What I'm sharing with you now can be seen on any time frame. The idea is very simple. We're talking about fair value gap. This is what happens when the market moves radically in a particular direction without a retracement. And it's measured by 3 candles. You can measure that efficiently by 3 candles. It could be a consecutive directional candle, or or it could be an alternating candle. What is the consecutive directional candle? When you have 3 candlesticks, for example, 1, 2, 3, when they move in the same direction, consecutive directional candles. All right, 1, 2, 3. The distance between the first and the third is usually your fair value gap, which is right here. Can you see that? This is your fair value gap. This is fair value gap. So put that as FVG rather, FVG, meaning fair value gap. So if you have a fair value gap, what does that mean? That is the zone you have that 3 consecutive directional candles. They move the same direction and they created very good momentum and they shifted the ball above the previous high level. So it is important that when the price is coming back, one of the things you could be waiting to see is to see the price coming back into the fair value gap. If you're not considering fair value gap here, you know my form of analysis. If you are dealing with demand and supply or probably dealing with something else similar to that, this level right here would have been where we're expecting the market to come into. So in this case, market didn't come here, it bought, and it bought well. So it just be a case of our market did not come to our level, but it bought well. If that is all you know, you will miss that entry. But if you know fair value gap, you're going to catch that entry right here. Can you see? 20 pips below that level is still very valid for a buy. This is the bullish fair value gap. Market created 1, 2, 3 candles. The moment the price started creating this candle to break above here, then you made this as your fair value gap, meaning you're expecting the price to sell back into it and start buying later. That is the meaning. Do you get it now? That is the meaning. So we have that buy with this way. Okay. You have that buy moving this way, and it makes sense. So just like that, just like we have it here too. 1, 2, 3. But I don't like this kind of formation. I would have loved that my third bullish candle is above here too. So far so well. That's what we got here. Isn't it? This is the fair value gap. Fair value gap. It gives us a buy momentum. It bought off. Can you see that? Let's look for another one. In the current market price, do we have any fair value gap here? Of course we did. Look at this. This is an alternating candle one. An alternating candle. Bearish, bearish, and gap down to form bullish. So if you check that, between this 1, 2, 3 candles, you would have found what? You would have found something like this. Something like this. This is a fair value gap, isn't it? 1, 2, 3 candle, meaning you're expecting the next move to move back into this range. So what we call it CB or BC. That simply means, please mute your microphone. CB means sell side imbalance and buy side inefficiency. And this is an example. The sell side is having imbalance, and that means there is a buy side inefficiency. If there is imbalance, it means the price moved from here 1, 2, 3, leaving a gap. That is imbalance price. Okay, so price have to go back to that zone to give us a buy opportunity. That is when it's balanced. Do you get me? All of this price level, what about here? 1, 2, 3, 4, 5, all of this place, what happened? This is a balanced price range, a balanced price range. The balanced price range, the market is not giving you any alternative, any consecutive pull out of a zone, regardless. Do you get that? Bullish fair value gap zone is still here, 1, 2, 3, to break the previous high level, isn't it? Look at the gap between those two. That is what it's referred to. This one is called what? Bullish fair value gap. Buy side imbalance and sell side inefficiency, meaning the market have to move downward for efficient flow. So this is the price moving downward for efficient flow. So we have bullish imbalance and bearish imbalance. This one right here is a bullish imbalance because it gave us a signal for a buy. Right here, we also have a bullish imbalance. As you can see, 1, 2, 3. Markets move like this, break the previous high, and it swept down right into this level. What do I say? Even 10 pips below this level is still very valid for your entry right here. Okay. Then the market actually did this. It pushed up more and delivered about 140 pips above that price level. That is what? That is fair value gap. Now, do we have any bearish fair value gap at some point? Yes, we do. If I take this out, look at this. 1, 2, 3. This is the alternating candle type, which I don't like this much. I really do not like this formation because of the candles anyways. But trust me, if you've understood this, how it works, you will pick this level too. We have a candle here, a candle here, a candle here, making 3 candles. Is there a void in between where the price has not invalidated? Yes. Expect the price to go back there before it starts selling. It went back there and it started selling. And one of the best places you can get a sell from is the consequent encroachment zone. And that is the middle point of this level. The middle point of what? The middle point of a fair value gap zone is called CE, consequent encroachment. Expect the price to bounce in there, give you a sell. In this case, the sell was not much. So they gave about how many pips in total? I'm coming. What is this? About 63 pips in total, which is not bad. Okay. So let's check out again if we have fair value gap zone above anywhere. This is a breaking of a structure. We saw that. Before then, we have 1, 2, 3 candles. So we mark it right there. After it, we saw another 3 momentum candle, 1, 2, 3, which means we have another fair value gap zone here. So this is where it becomes tricky now. If it look like it's an opportunity, why is it not forming everywhere? Yeah, it can happen. Now this is it here. That is also a fair value gap. I will take this one out so I don't confuse you. Can you see that now? So the way it works, if we reached out to this, and this is our fair value gap here. Okay, this would be our what? This would be our fair value gap. And also, if we consider this, and this, that means this would have been our fair value gap too. This one would also be our fair value gap. So the real question now is, as the price was here, we never know where the price was heading. Which one would we have gone for? Is it this or this? Ideally, personally, for me, I prefer this. I would have preferred to go for this. I would have preferred to go for this. This looks better for me. Okay, this one looks better for me. Because right here, I believe more in extremes. I will feel more like the market wants to take stop losses of people here and activate people here for a buy. So I won't be taking a buy from here. I would rather wait here. But trust me, they are both good, but I prefer the one that forms at the extreme. So in a sell one, I prefer the one that forms above. The one at the toppest level is the one I go for. This is how you use a fair value gap to trade. Sometimes it is that simple. At the opening of the market for this week, I saw the market has sold, even though I projected that I was going to sell. And when I saw that sold, it was leaving a gap on it. And I said it was going to buy, but I didn't tell you that because it was night on a Sunday. And yeah, just me on the chart. I knew so well that that was going to buy. And that was the entire buy it delivered on that day to following morning on Monday. Look at it. This was Friday candle. Let me take all this out. This was Friday candle, right? And this was Sunday candle. As this opened on Sunday, what happened to this? All of these candles have not formed. Don't forget. So the first thing I noticed is we have a gap. And anytime we have a gap, it is like you should know that the price will always find a way to fill in the gap. The price will find a way to fill in the gap like this. Okay, like this. The price is going to try and fill in the gap like this. So when I saw this and this candle was forming, somehow I knew this gap was going to form, was going to be filled. So if I took a buy, even after the closure of this candle, no matter what happened in this market, for that buy range after I still walk home with what? With 20 pips. This is like you don't need analysis for it. Just understand how it forms. All right. It filled that form, it filled that gap. After filling that gap, then it pulled out of it, started going to another level. So what made it to sell and why didn't it sell and blah 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 blah. That's another conversation. But first thing first, the price actually got to that zone and it filled it up. That is a gap. So fair value gap, it's a very good indicator for how you perceive markets, and it also helps you to know exactly what you need to do per time. Okay, you can use it on any time frame. So let's go to another one. Let's go to somewhere else. Let's go to another price level. Let's go and see it there, how it works there. We found it multiple times here, right? Let's find some of it. Fair value gap. Do we have any high was taken out? This high. 1, 2. Oh, this is not nice. It's not nice. It's not nice because of the gap. So we're not going to consider it, okay? We're not going to consider it. Let's look for fair value gap. Does it fill? Yes, it filled. Sometimes you can find it fill. So how it failed and how you can use it as how you can convert it to opportunity even when it fails is what I'll be showing you tomorrow, God willing. So I'll be doing that not today. I plan to just spend 30 minutes with you, and I'm not ready to overbulk you with anything. Go back to the market, go back to the price, go back to the charts, analyze as much as you can, ask questions about charts. That's what I want to see. We've had lots of information loaded. We can give you screenshots, we can give you a lot of that, but what can you do with it? So that's the real question now. Okay, I'm trying to look for a fair value gap. Yeah, 1, 2, 3. This looks good. It's not just smooth enough. 1, 2, 3 also looks good. It's not just nice enough. I prefer when the momentum is quite significant, but you can identify that based on definition. This is what a fair value gap. And from there, the price moved above to break the previous high structure, which was here. Can you see that? This was the last fair value gap we had before the price break above the previous high structure. Not bad. Nothing is bad here. Just that we need to wait and see the price come back into that zone before it buys off. And this is it here. This is it. So if you trade other blocks and you're expecting the price to come back into this level before you start buying, sometimes other block fails you because there's something above that the market respects, such as fair value gap. Now you're seeing it now. I said we have multiple things that can take you in a trade, but you have to hold on to one or two. Everything you know cannot take you on a trade. They will conflict you. They will confuse you. It's like a conflicting knowledge. You won't get the entire value. You know this, you know that, and you know how to use them. That sets the standard, and it makes the difference. This is a bullish order block again. All right, can we look for a bearish order block? Can we look for a bearish order block? Okay, let's find it. 1, 2, 3. This is an alternating candle, right? Not the same candle. We have bearish, and bullish. So right here is what is a fair value gap. So this is a bearish fair value gap. Price created this whole structure and blah 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 blah. Wait for the time that the price will come back in here and look for a sell. The price did first at this level and it sold, right? 49 to 50 pips. It came back there again, and what happened? It sold again about 40 pips before they now smashed that level, which is normal, absolutely normal. Anything you hear about the pan as support and resistance zone, resistance be broken, turn to support. This is the same thing happening here. This was holding the price at first. All of a sudden, it broke the price, and price is using it for a sell. Where are they going? To the bullish fair value gap you found before all of this saga, and this is it. The price creating that, meaning the momentum was a bullish one right here. That's the meaning. We want to buy more than we sell. That's why we see this. Okay. Yeah. Let's see. Do we have any fair value gap? I believe fair value gap still around there. Do we have any? Check it out. 1, 2, 3. It broke the previous, all of this previous high. 1, 2, 3. So where is the fair value gap zone? This is it here. From here to here and draw. In the future, when the price was coming, it didn't get there. Later, they moved back and forth. They got there. They activate for a buy. They kept on buying. They moved and 65 pips. They even did more. Okay, they did more. They bought more than 65 pips eventually. This is about 130 pips, and they can be doing more than this in the next days to come. They can do less. They can do just that. Question. Who is that? Jack Liner. Please mute your microphone. Jack, can you please mute your microphone? I'm muting you now, but please stay muted. If you unmute this microphone again, I will remove you. Please stay muted. Okay, I've removed him. Don't worry. So, any question, everyone? Do you have any question? That is a simple way to use a fair value gap. All right. Tomorrow, by God's grace, I'll be sharing with you how fair value gap can actually fail and how you can use that failure for another opportunity. So today, this is what we have to do, and this is what we're doing. If you have any question, let's go. Hit your question. I'm living here.
Adam,
Please, yes.
Sorry, good evening, sir.
Yes, good evening, Samuel.
To have like a record of sorry, I'm actually in the United States, but I'm living there.
I
If it's
can.
possible to have like a, can you hear me, sir?
No, it's noisy. I can't hear you.
Okay, I've left there. Can you hear me now?
Okay, it's better.
Okay, I was asking if it's possible to have like a recorded session.
Of
I
course.
didn't get anything. I was knocked out by network. And,
Okay,
okay, sir. Thank you.
no problem. Yes, this session is recorded. You will have full access to the video tomorrow by God's grace. I will share that with you on the group.
Okay, sir. Thank you very much.
All right, you're welcome. Okay. Question, ladies and gentlemen, do you have any question? Some of you are pro traders with fair value gap. Some of you just like it because it works when we show it. If you want to start testing this out, do that on your demo for a couple of days or weeks. Try it out and see how well it works for you. It works perfectly for me, actually, yes. But I have multiple things I'm looking at on the chart at the same time. I just select one. And for your case study, for the case of people like you, for your best interest, I pick something really, really simple, something you can even identify without analyzing the charts. That's what I do, so that you can find these things very, very easy to identify on your chart and make money. Because it's not about you sounding professional. No, I'm not a big fan of that. You know me. It's not about sounding professional. It's not about sounding too good or too plain or smooth. It's about how much you can make from the market and how much losses you can shoulder without being frizzled out. Okay, that's what really matters. So to me, there is nothing you really want to impress me with than you making profits. Some of you are doing well. Some of you sent screenshots of profit made and blah blah blah. You trade you took with support and resistance or with demand and supply. Candlestick formation patterns. The patterns on its own, on the candlesticks alone. So they're all nice. Trust me, everybody cannot trade the same. But I see what you do. For those that are showing it, sending me screenshots and asking questions, I see what you do. I want to encourage you to keep doing that. If I respond late, sorry about that. And if I don't respond at all on weekend, yes, I don't respond on weekend, only if it's emergency. And I don't pray you have such emergency. I don't respond to your chats on weekends. So please, if you send on weekend, I will reply only on the weekdays. And for those that have sent on weekdays, yeah, of course, I definitely respond to you. So it may take time, but once I have a couple of things sorted, I come back to my chat and I sort that too. And I can tell you are doing great. You should keep doing that. Losses should not discourage you. Okay, it's part of the business. If you don't know how to handle losses, you definitely can't handle profits. That's just the truth. If you have not lost money, you can't really keep money. That is not a motivational quote. It is a reality in the market. So I wish you the best. This is everything you need to know about fair value gap. No long talk, no big grammar, simple, spot on, right on point. Just like that, three candles, you spot it out where there is imbalance and wait for the price to come back in there or to the middle point of it, which is called consequent encroachment, CE, or you call it a threshold, or you call it an equal, what's it called? That's it. When something is equal, equal, what's it called? English,
Equivalent.
what's that?
I said equivalent.
Equivalent. No, 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 equivalent. Thank you. No
Equilibrium.
equivalent. Equilibrium. Thank you. Equilibrium. Yeah, equilibrium. Thanks. So it could be your equilibrium. Anyhow you want to put it, you can put it as your middle point. Just understand that all we are saying is the middle point of the fair value gap. Forget about the name. Don't get lost. Okay. So, ladies and gentlemen, this is where I will be stopping for today. Thank you for joining. This is all we have for today. If you have any question, please go ahead and ask. This is what we have for today. Thank you very much. If you have any question, please go ahead and ask your question. We have just 2 minutes to wrap up. Tomorrow, I'll be sharing with you how to use the failure of fair value gap as an opportunity. And I'm going to be sharing that tomorrow. By God's grace, we should be here together. Okay? If there's no
Are we
question.
going to be having classes every day by this time?
Not every day, depending. Depends on the program we have. But
Okay.
sometimes, but when we'll be having classes, our classes will be around this time, 4 p.m. Nigerian time.
Okay, thank you.
All right, you're welcome.
Hello, sir.
Yes,
I have a question.
Yeah.
Can you hear me?
I can hear you.
Okay, hold on.
Yeah, my question is, fair value gap, can price come back to fair value gap twice or just one? Make it
I can barely hear you. The noise is much. Yeah, the background noise is much. Faintly.
Hello, sir. Can you hear me?
Can you hear me?
I can hear you.
Okay, sir. My question is this. Sir, if we have like more than 2 or 3 fair value gap in an uptrend or downtrend, how do you treat it?
I've said it before now. You will go to the most extreme. Okay. You go to the most extreme. What do I mean by most extreme? For example, if I have excuse me. Let me draw something for you very quickly. My time is up now. I have another meeting to join, so I have a training. So let's say we have something like this in the market. Okay. Now let's say we have something like this. All right. And we have a value gap here. I believe the person that has this question can see everything I'm showing. Right.
I can see.
Fantastic. So now, if we have a fair value gap like this, based on your question, if we have like 3 fair value gaps, we have another fair value gap here, and also we have another fair value gap here. By structure, by narrative, by checklist, all of these structures, all of these fair value gaps are nice. Do you get me? All of these fair value gap, they are nice. They are good to work with. But if you must filter, how do you now choose? For me, I said I prefer the one at the extreme. All of these are bullish fair value gap. This one makes sense, right? It makes sense. It's not bad, but it could just be for a short term. What about this one right here? It makes sense too, but it's not bad, but can give you some money. Maybe probably get back here before you start dropping. What about here? This will be the best one, because once this one moves, at least we make significant amount of money before it start bouncing. So I'll prefer the one at the extreme right here. Okay. One other thing you should consider if you want to do your fair value gap thing is the entire swing you have from here, from this level to this level. Measure it. Is the fair value gap forming below 50%? Like this is 50%. This is about 70%, 80%. Anything below that 50% is a good spot for you to buy if you find your fair value gap there. Do you get me now? So this is your, okay, let me use this too. I think I should use this. Which one should I use? Let me use this scan box. Look at this. Look at this one now. This is your entire range. This is where the bullish range started from, and it's moved to the gate here. Where is the 50%? This is the middle point, 50%. Any fair value gap you found above it, it's good or it's better to ignore. or any fair value gap you found below it in this green zone, for example, any fair value gap from here to here to here, they are good ones or they are better ones for you to use. Okay, I think I've answered your question.
Yeah, thank you, sir.
Right, you're welcome. Great man. Please mute your microphone anytime you are here. I can't cope with this.
Hello, sir.
Yes, go ahead. That's a question. Good
Sir,
evening.
please, I saw 2 demand zone on GBP USD. Can you switch to GBP?
Actually, I'm not doing that today, but I'll just switch to that to show you, to answer your question.
Okay, sir.
Okay. What time frame are you saying it?
Yeah,
What time
30
frame are you
minutes.
saying it? Okay. Go ahead. I'm with you.
Move sideways, sir. Left side.
Okay. Where is it?
Yeah. That is it, sir.
Which one?
These two zones. There's that one and the one below it.
This one?
No.
This one?
Yes, and the one below it.
And this one below it?
Yes, sir.
Okay, so what's the question then?
Which one is more good? Are they
One
all
that is-
valid?
To some extent, they are, but once to react with this, for me personally, I prefer to do this on higher time frame because it gives me that structural confidence. This one is a lower time frame, lot of noise, can easily be smashed. But based on structure, regardless whether this is forming on 1 hour time frame or 1 minute time frame or whatsoever time frame, which one would you have used? Yes, if you want to do this level is better off if you want to consider this zone for a fair value, for a demand zone, because we had that, but there is not much range here per se that give a specific sponsored candle to break the previous high. We have it, and we have like 2 candles to break this high, and that is quite unfortunate, one kind. But then, if you want to at least, if I would recommend, I would say this level. About what price range? This is about 1.3465 and 1.3459. That'll be the level I'll be spotting. I'll be looking at a reaction. I'll be expecting a reaction from there in the future. That being said, but on a 4 hour time frame perspective, which is a capital thing for me, you can see it on 4 hours. Look at it on 4 hours. It means nothing.
Yeah.
This on 4 hours, it means nothing. It will smash through it as if nothing happened. And on 30 minutes, it can give you small profit, but it's going to smash it based on what I'm looking at on the 4 hour time frame. So that means it's not really much of a reliable zone. Rather, on the 4 hour time frame, I would have preferred that if you use the kind of price level like this, it would have made more sense on the 4 hour time frame, like I said. And also, this level too would have made more sense if you're on 4 hour time frame. But if you are not, regardless, if you are on another time frame, like 30 minutes time frame, what I share with you is what you can consider. It makes more sense that way. Okay. So on 30 minutes time frame, this is it here. Don't forget, where is that? 30 minutes time frame. I think this is it on 30 minutes time frame.
Yeah.
Good. It's just going to give it's going to be a brief reaction. It may not really hold much. 30 minutes demand zone. Okay. So let me just put it there so I can check it back later. All right.
Thank you.
Okay. Yes, you're welcome. All right, good. So you spot that. Find a reaction on it and find confirmation, probably on lower time frame before you enter the buy. If you're taking the buy, you won't be expected to stay that long on it. I think your buy should be about how many pips? Not really much, if you ask me. I don't risk too much because this guy is going to sell. All right. And this is about how many pips in total? I think 1:3 should be fine. If this is up to 1:3, I think you're good. 1:3, yeah, 1:3.05. So if I will be doing anything on this, this is what I would likely do. But I'm not a scalper. Let's see how it goes. Anyways, I'm just giving an insight on that. Okay, ladies and gentlemen, thank you very much. Yes, this is where we stop for today. And tomorrow,
Hello, sir.
please make it very sure. Go ahead, please.
Thank you, sir. Those of us that participated in the last week online trainings, when are we getting our certificates, sir?
You should be getting it anytime from now. In fact, you should have gotten it. Go and check your email.
Okay, thank you, sir.
All right,
Thank
you're
you.
welcome. All right. Thank you, ladies and gentlemen. It's a beautiful time spent here. Go back to your chat and practice. You know, it's not about how long you stay in a training. It's about how much impact you get from any training. So we've done what we have to do today. It's now left to you to do your parts. Go back to your chats and spot all of these things we've talked about. Try to spot them, mark them, and watch out how the price reacts with them. That is how you learn. If you have any question, please do not hesitate to ask question. This is themed clarity over complexity, and that's why we're not even spending up to 1 hour. Just straight to the point, direct and simple. See you tomorrow, and God bless you. Have a wonderful time, everybody.